most stocks are going down irrespective of their potential. That's absolutely right. Scaffold is not here to predict share prices. Think about how a business adds value and increases value. Think about a business. We've got a retail business. We come up with a concept or a product or a brand. That's taken us 6 months to a year or maybe a couple of years to develop. We then have to go out and negotiate with landlords for sites. We go and negotiate with those landlords. That takes time because there's incentives to negotiate. There's a whole bunch of things that you've got to do. And if you're dealing with more than one landlord, it's not as simple as dealing with Westfield and you say you want to be in every Westfield. They would be delighted with that, by the way, but they are very hard negotiators. So you're dealing with lots of different landlords. That takes time. Then you've got to deal with a builder. If anyone's renovated a house, they know what that's like, dealing with a builder. You've got to deal with lots of builders because those builders are going to actually be involved in fitting out your store. You've then got to deal with you've got to negotiate with the landlords again about what's right, what's appropriate, what's allowed, and what's not allowed. All of this takes time. You haven't even opened the shop yet. Then you've got to open the store after you've filled the store with the inventory, you've negotiated with the suppliers, you've got the best price for that, you've opened up accounts for foreign currency management and hedging if you're buying goods from overseas or selling them overseas. Then you've got to stock it. Then you've got to start your marketing. You've got to set up a business plan and a marketing plan. You've got to execute that marketing plan. People have got to find out about the store. All of this takes time to build. Now, how long do you think that takes before we've got a successful franchise, before we've got a successful brand that dominates Australia, that everybody loves shopping at, that is demonstrating high rates of return on equity and so on and so forth? How long does that take? It takes years. In the interim, what's going to happen to that company's share price? It's going to rally hard as people anticipate a successful rollout. Then it's going to fall because it's taking longer than expected. Then it's going to go up again because the company has exceeded its analyst forecasts. Then it goes down again because something's happened in North Korea. They've rolled out a nuclear missile. So the price goes up and down. Scaffold is not here to tell us that that because a company is A1, that its share price won't fall. If we look at, let's have a look at, let me look at a particular stock. Let's look at ARB. Code is ARP. We can type in ARB because Scaffold lets us use the code or the company name. So we can see here ARB. If we then have a look at the capital history, sorry, not capital history, the quality score, you can see ARB has been a high quality business for a long, long time. It's consistently an A1 or an A2, with the exception of 2005 when the company paid a special dividend. And I believe it raised capital or borrowed money to fund that special dividend, and that affected its quality score. But nevertheless, the rest of the time it's been high quality. But what I want to show you is this period during the GFC, 2008, 2009, 2010. If we then have a look at the Scaffold line, you can see the share price here in 2009 at the depths of the GFC was down 40% from its high. So Scaffold, even though Scaffold is suggesting that it's an A1 or giving and attributing an A1 score to ARB, it doesn't mean that the share price is not going to go down. It doesn't mean that the share price isn't going to fall 40%, which ARB did during the GFC. Now, there's a very real difference, and I'll talk about Forge for a minute. We might pull Forge up, actually. FGE is the code. Okay, so you can see that the valuations have all been updated now for the recent announcements that Forge have actually made. What's interesting is that Forge's share price was always below intrinsic value, and it was rising up until recently. But I do know that even if we look at the chart for Forge prior to its recent announcement, I do know that its intrinsic value was declining. And for the reasons I've already articulated, I personally am not interested in owning businesses, certainly not large positions in businesses where that intrinsic value is declining. The other thing to remember about Forge is that its prospects, being in mining services, are very uncertain. Its prospects are uncertain. Now, what do we know about the current situation? Well, we know the company, based on its announcements, we know that they were reviewing some contracts that looked like had turned toxic, even though, and they were reviewing it, and they brought experts in, they brought in KordaMentha, ANZ subsequently brought in KordaMentha, but the company brought in some experts to review the business that they'd bought, and they didn't tell the stock market that they were doing that. That to me suggests that the company could be exposed to a class action claim. Whether that claim would be successful or not, only time will tell, and I don't know whether one will be launched. But I can tell you that there has been reports in the newspapers of lawyers scouting around fund managers asking whether or not they would be interested in a class action here. So there may be an opportunity for investors to recover some of their losses in Forge. Now that's cold comfort, because those sorts of claims can take years and years to prosecute and subsequently be settled, if indeed they are settled. What's important from an investment perspective when you're going into an investment? Yes, it's important to buy high quality business with an A1 or an A2 score. Yes, it is important to buy businesses at a discount, but it's also important to buy businesses with bright prospects. And I would argue that the prospects for Forge were uncertain. Yes, Forge, based on the information that was publicly available, remembering the company didn't release any information about what was going on in the background, and up until the annual general meeting, even at the annual general meeting, the company said everything was going relatively fine. And so it was one of the higher quality, based on the information that was publicly available, one of the higher quality companies in the mining services space. But that's not saying that the prospects for the mining services sector had turned bright. Okay, so that's Forge, and that's hopefully answers the question with respect to prices going up or down.